All right, let's dive into a really impressive quarter from Hercules Capital. That's ticker HTGC. Their Q2 2025 earnings just hit the wire, and wow, it really tells a story of major growth, especially in a market that's been pretty tough. So let's get right into the numbers.
Okay, so the big headline number, the one everyone watches for, a business development company or BDC, is net investment income per share. It's basically their core profitability. And for Q2, Hercules knocked it out of the park with a record 50 cents.
Now, a number is just a number without context, right? Well, that 50 cents wasn't just a new record for them. It was a solid 6% beat over what Wall Street analysts were expecting. They were looking for 47 cents. In this kind of market, a clean beat like that, well, it sends a really powerful message. And you know what? The market definitely listened. The stock popped 2.1% on some pretty heavy trading volume right after the news. But here's what makes that even more impressive. The rest of the BDC world, if you look at the BISD ETF, was actually down that day. So Hercules was charging forward while its peers were taking a step back. So a strong beat and outperforming the market. That's the what. Now let's get into the how. What was the engine that was actually driving these incredible results? Well, it really all starts with their ability to find new deals. For the second quarter in a row, they originated over $1 billion in new debt and equity commitments. $1 billion. That's a massive number. And they didn't just line up those deals, they put that money to work. They deployed a record $709 million in actual fundings. That is a nearly 54% jump from this time last year. It just goes to show you, they aren't just sourcing deals, they're executing on them at a faster and faster pace. And the result of all that activity? You get a platform that is just expanding like crazy. Their total assets are now sitting at over $5.3 billion. That's all the proof you need of their growing dominance in that venture lending space. So here's the scorecard for the quarter, and it's just green across the board. We already talked about that nice NII beat, but you can see they also beat on total revenue. And check out that return on equity, 17.1%. That is just a fantastic indicator of how efficiently they're turning capital into profits for their shareholders. And here's what it all boils down to for investors. That 50 cents of income they earned, it easily covered their total payout of 47 cents. In fact, this is the 20th consecutive quarter that they've paid a supplemental distribution. That is a huge sign of just sustained, really robust earnings. Okay, the performance has been amazing, no doubt. But smart investors, are always looking ahead. So in this next section, let's unpack the strategic moves Hercules is making and what management is telling us about what's coming down the pike. Management was really busy this quarter building a fortress of a balance sheet. They issued new long-term debt, they expanded their credit lines, and they raised more equity. What they did was effectively lock in this massive war chest of cash. All this dry powder gives them incredible flexibility to jump on opportunities without any financial stress. And I think this quote from the CEO, Scott Bloomstein, is so important. Even with all this cash ready to go, they're choosing to be patient. They pointed out that some competitors are acting aggressively, maybe even irrationally. Hercules is making it clear they're deliberately avoiding those overpriced, risky deals to protect their long-term returns. You could call it selective aggression. So, looking ahead, management laid out a really clear roadmap. They're telling us to expect a seasonally slower Q3, but they are still guiding for a record-breaking full year. They see loan prepayments staying stable, which is great for predictability, and they expect their core yields to stay nice and high. And critically, they have a plan to gradually increase their leverage, using that strong balance sheet to fuel future growth. It really paints a picture of controlled, confident execution. So, we've gone over the fantastic results and the forward-looking strategy. Now it's time for our final segment, the next call. This is where we distill all of that information into our own analytical take on where Hercules Capital goes from here. After a quarter this strong, this is really the number one question on every investor's mind. Can they keep this incredible momentum going? From our perspective, the bull case for Hercules is stronger than ever, and it really stands on 4 key pillars. First, their sheer scale and platform gives them access to the best deals out there. Second, that fortified balance sheet provides both firepower for offense and a shield for defense. Third, their execution is just so disciplined. Like we heard from the CEO, they're focused on quality, not just risky volume. And finally, their growing advisor platform is starting to offer a whole new diversified income stream. It's not just about lending anymore. And all of this brings us to our rating. We are initiating coverage of Hercules Capital with an outperform rating. The combination of record growth and that powerful balance sheet is just too compelling to ignore. You pair that with a proven, disciplined strategy, and we believe Hercules is perfectly positioned to continue outperforming its peers.
And as always, please remember this is not financial advice. This explainer is for informational purposes only.